Welcome to today's What Will Move the Market show. I'm your host Prem. It's Friday, January 23rd, 2026, and here is everything you need to know as the markets open for today. Let me start with what happened overnight on Wall Street. Markets delivered a solid second consecutive day of gains on Thursday, with the S&P 500 climbing 0.55% to close at 6913. The Dow Jones Industrial Average rose 0.63%, finishing at 49,384, and the Nasdaq Composite gained 0.87% to settle at 23,426. The primary driver behind this rally was President Trump's decision to back off from his tariff threats on European allies over the Greenland dispute. This geopolitical ease sparked broad-based buying, particularly in technology stocks like Nvidia, Microsoft and Meta. However, on the downside, Intel saw a sharp decline of around 12% in after-hours trading, following disappointing guidance for the current quarter, while Capital One stock dropped more than 2% after announcing its acquisition of Brex at $5.15 billion, but missing on fourth quarter earnings. The move suggests that while sentiment improved, earnings quality remains closely scrutinized by investors. Turning to Indian ADRs, overnight performance showed a mixed picture with continued weakness in the banking sector. Infosys ADR declined 0.11% to $18.29. HDFC Bank ADR fell 0.09% to $32.1. And ICICI Bank ADR slipped 0.48%, closing at $29.16. The one bright spot was Reliance Industries GDR, which gained 0.33% to $61.2, pointing toward potential strength in energy and commodities as geopolitical tensions ease. For Indian investors, the weak banking ADRs overnight suggest some caution may be warranted in the sector at the open, though valuations remain attractive for long-term accumulation. Moving to Asian markets this morning, the Nikkei 225 index closed with a decline of 0.41% to 53,802 on Thursday, despite broad optimism globally. This weakness reflects investor nervousness ahead of the Bank of Japan's policy decision scheduled for today, which concludes a two-day meeting. Markets are watching closely for any hawkish signals from the BOJ regarding rate hikes, even though the central bank is widely expected to keep rates unchanged at 0.75%. The yen has weakened substantially in January amid concerns over Japan's incoming Prime Minister's fiscal loosening plans, creating pressure on export-oriented stocks. However, the Hong Kong Hang Seng Index managed to inch higher, gaining 0.17% to 26,629, while the Shanghai Composite rose 0.14% to settle at 4,725 points. These modest gains in China suggest that regional sentiment remains cautiously optimistic despite trade headwinds. GIFT Nifty futures, which provide early directional cues for the Indian market, are trading flat at 25,358 as of this morning, suggesting a neutral opening is likely. This level sits right at yesterday's close and indicates that traders are awaiting fresh catalysts. The index remains trapped between immediate support at 25,200 and resistance at 25,400 to 500. A break above 25,500 would signal renewed upward momentum toward 25,006 to 700. But traders should exercise caution at elevated levels, given the recent range-bound consolidation. On the global news front, Trump's decision to ease tariff threats has provided some relief to markets globally, though it remains uncertain whether this framework agreement on Greenland will lead to broader tariff relief with India. Currently, India faces 50% tariffs from the US, with 25% specifically on Russian crude oil imports. Trump recently expressed confidence in reaching a good trade deal with India, while praising Prime Minister Modi at the World Economic Forum in Davos. This optimism is encouraging, but concrete progress on bilateral trade negotiations remains pending, making this an area to monitor closely in the coming weeks. On the domestic front, Indian markets have shown resilience despite persistent foreign institutional investor selling. On January 22, FIIs net sold approximately 2,550 crore rupees, continuing a year-to-date trend of outflows that have totaled over 36,000 crores. However, domestic institutional investors stepped in aggressively, net buying over 4,200 crores, providing a cushion against foreign selling pressure. This dynamic underscores an important structural shift in Indian markets where domestic SIP inflows and mutual fund participation are now providing stability. Additionally, all eyes remain on the Union Budget schedule for Sunday, February 1st at 11 in the morning, where expectations center on income tax relief, capital expenditure priorities, and potential sector-specific incentives for manufacturing and infrastructure. The RBI is meanwhile expected to hold policy rates at its February review, given creeping inflation and a need for caution, despite the Goldilocks economic environment the governor recently highlighted. For today's immediate technical outlook, the Nifty 50 needs to hold above its 200-day exponential moving average near 25,100 to maintain a constructive bias. Immediate resistance remains clustered at 25,004 to 500, where call writing has established a overhead supply zone. Bank Nifty is slightly more fragile, with critical support at 59,000 marking a make-or-break level. Traders should be cautious about chasing rallies at resistance levels, given elevated India VIX at 13.35, which is still above comfort levels. A sustained close above 25,500 on the Nifty would be needed to signal real uptrend resumption, while a breakdown below 25,100 could accelerate declines toward 24,900. On the commodity front, the backdrop remains supportive for precious metals following geopolitical tensions. Gold climbed 0.25% to $4,950.5 per ounce, and is eyeing new all-time highs near $5,000 as investors seek safe havens. Silver surged 2.51% to $98.58 per ounce, showing explosive momentum on the back of China-driven trading activity and a smaller market size that amplifies price moves. Crude oil edged up 0.1% to $59.72 per barrel, reflecting the easing of geopolitical turmoil, but remaining susceptible to further pressure if global demand concerns resurface. Energy investors should monitor OPEC production cuts and any signals on U.S. inventory draws in the coming sessions. Today's key watch for traders and investors centers on positioning ahead of the Bank of Japan's rate decision, which could have ripple effects across Asian equities and the yen, potentially impacting Indian currency movements and IT stocks with Japan exposure. Given the mixed global backdrop with strong U.S. markets offset by caution on Asia, traders should focus on selective stock picking based on individual fundamentals rather than broad index chasing. The domestic cash flow advantage and reasonable valuations in dips make this an environment where patient accumulation on weakness is rewarded over aggressive buying on rises. Monitor your portfolio's beta carefully and trim positions that have run significantly against current resistance levels. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every day and get the latest market insights right when you need them most.